I'm a six-figure funded trader, and today I'm going to share with you step by step exactly how I trade the New York session. By the end of this video, you can have a full understanding of exactly how to do that. You're going to have the tools, the framework, and the knowledge needed in order to achieve a profitable system within the markets. For your own reference, just so you can see the trade I'm about to share with you, I did execute within my prop firm account. I'm going to share that on screen right now, along with the analysis that was shared to the premium community. Now let's just jump straight in. So step number one is identifying our directional bias. Very, very simply, we use the 50, the 100, and the 200 exponential moving average. This is the trend filter that you need to give you an objective framework when you are executing. So this takes away all of the guesswork, to trying to figure out whether you're sell bias or buy bias. And simply, when the 50 is greater than the 100, which is greater than the 200, so for example, when all EMAs are in order, then this is a buyer's market right here, and vice versa for a sell market. And the problem that I find in what a lot of inexperienced traders face is they do not have the patience to simply wait for the exponential moving averages to go in order. So simply waiting, that alone will transform your trading career. And the reason why is because when all of the EMAs are crossed over together, the market is simply ranging. And we're trading a trend following system. So we need to ensure that we have the right conditions for the trending markets. So that's step number one, identifying our directional bias. Now let's look at step number two, which is identifying a run on liquidity. But just before that, I think we need to identify what liquidity is so everybody is on the same page. And in the context of smart money concepts, SMC trading, areas where smart money is likely to execute large orders due to the availability of opposite market orders. So now that we know the definition, let's apply this into the actual markets so we can understand how this works. So this is the New York session right here. As I said, this is between 1 p.m. and 3 p.m. GMT. That is when the kill zone for the New York session is within. And entering into the New York session, what we want to see is a step number two, which is a run on liquidity. And how do I identify areas of liquidity? Very, very simply. What we have down here is the Asian session low. And we can mark this on with a dollar sign indicating that there's sell side liquidity resting below here right there. So below 2673. And the reason why and how we know that there's liquidity resting below there is because this is the Asian session low. So anybody that was trading the Asian session, their stop losses and breakout traders are going to be interested within this market below this area right here. So if we can see a raid of sell side liquidity, then that is what entices us to look for a potential long trade in the market. You see, a big problem that traders have is they don't have the patience to wait for price to come down below to liquidate these orders and then look for a shift and then a trade to the upside. Because traders want to enter the market too prematurely, but just simply waiting for the run on liquidity will transform your trading completely. So let's play out this New York session right here. And you can see we've ran this liquidity right here below this Asian session low. And we've started to reject off this level quite strongly. Now let's look at step number three, which is market confirmation. Very simply, all we want to see is a bullish candle close after we have seen the liquidity sweep. This indicates to us that buyers are now present in the market, and therefore momentum is now shifting to the upside in line with our buyers. So what you can see right here, once we've seen this liquidity sweep, we sweep that sell side liquidity right there during the New York kill zone, and then we get an injection of bullish pressure right here. So step number 3 is simply just identifying this injection of bullish pressure. Step number 4 is entering the trade. We can simply enter a long trade on the break of that candle's high with invalidation below the liquidity sweep, give it a little bit of room to breathe, and then simply, I like to target a 1 to 2 risk to reward because this gives you a very mechanical, rule-based take profit. Some people like to target liquidity-based areas. However, I've found from my backtesting data that a 1 to 2 is a very great mechanical way and also produced great results within the live markets. So you can see right here, we're triggered in on the break of this candle's high. And now we just need to be patient and allow that trade to play out. So you can see during the Asian session, this trade smashes take profit for a 1 to 2 risk to reward. And this is exactly how I trade the New York session on a daily basis. If you haven't already, make sure to join the free Discord. The link is in the description of this video down below for free analysis and to stay ahead of the curve with upcoming YouTube videos. Honestly, guys, the amount of free value that's shared within there is absolutely astronomical. As always, I hope you enjoyed this video. Let me know down below if you have any queries, comments, or questions, and I will get back to you. All of you guys, all likes are much appreciated, and I will see you in the next video. Take care, guys. Bye-bye.